If you are like me, and that's human, you probably have strong emotions and big feelings. And those feelings are even bigger when you open up your 401k statement and you notice that your account value is down. Look, I don't want to minimize that at all. These are hard times to be investors, to be 401k investors. But if you are a investor in a retirement plan, a 401k, a 403b, or even someone who is steadily investing in an IRA, this episode is for you. I'm Erik Garcia, certified financial planner and financial advisor, and I want to give you some encouragement during this difficult time of investing in your 401k. You have a superpower and you don't know it. And I want to educate you or talk or let's bring to the surface this superpower that you have been using for so long in investing in your 401k. And I don't want you to stop using it. I've had too many conversations with people that go something like this. Well, I think I'm going to stop investing until the markets get better. Or I don't want to throw good money into a bad market. I feel like I'm chasing bad money. Y'all, that kind of thinking is not good for your long-term wealth building strategy. All right. So if you are a 401k investor, lean in. This is true for those of you who steadily and regularly invest in a non-retirement account, but this is more targeted for those of you who are saving regularly for your 401k, for your retirement. So your superpower, we call it dollar cost averaging. Yes, that's right. Dollar cost averaging. Very simple. What you're doing is you're investing a fixed amount of money on a regular interval into the stock market. Right? That's all that dollar cost averaging is doing. You're not trying to time the market. You're not trying to guess when the market's going to be up or when it's going to be down. You are automatically putting in a percentage of your paycheck, a fixed dollar amount from your paycheck in an account, whether the stock market's up or whether it is down. So sometimes you're buying when the market's high and other times you're buying when the market is low. That is what dollar cost averaging is. So I want to talk to you about 3 benefits of dollar cost averaging. I want to talk to you about 2 challenges of dollar cost averaging. And I just want to give you some words of encouragement to continue your wealth building strategies by investing in your 401k. All right. So the 3 benefits of dollar cost averaging for retirement investors. Number 1, you are turning volatility into an opportunity. So think about this. When the stock market is down, like it is right now, depending on when you're listening to this podcast, I presume that it's going to be down for a little bit while, or it's going to be volatile for a little while here this year. When the stock market's down, the money that you're investing is buying more of whatever you're invested in. So a mutual fund that you're invested in, that money is buying more shares of that investment. You're buying things on a discount. And who doesn't like buying things on a discount? So essentially, you are buying more shares when the stock market is down. So in essence, you are averaging the cost, your entry point into the stock market. So it helps, I guess, minimize some of that volatility. So consider this. Investors who stayed true to their strategy, they stayed consistent to their strategy, recovered quicker in the 2008-2009 recession. So same thing would hold true today. If we're going to be in an elongated market downturn and you have a long time until retirement, you're just buying more and more and more of your investment at a discount. So stay consistent. Number 2, the second benefit of dollar cost averaging is it removes the emotion from investing. Right? It removes that, I don't want to throw good money towards bad money. It's in a bad market. It doesn't feel good to invest right now. My portfolio is down. We're removing that emotion completely. And look, I am not minimizing that. It is hard to look at your investment account and see your values down. I get it. I've got money invested in the market. I have conversations with a lot of you, and it is difficult. It is time. It is difficult, and it is a hard to make it through times like this. So dollar cost averaging says, I don't care what the market's doing. On a regular basis, when I get paid, I'm going to put a set amount of money, a percentage, into my investment portfolio. regardless, right? No emotion. We're not trying to start and stop based off what we think the market's going to do. All right. The third benefit of dollar cost averaging is you are building a very important habit that's going to help you build wealth, and that is discipline. In fact, I guess you're building it. Essentially, what you're doing is you're automating that skill set, right? You're not having to remember to do it. It is automatically doing it whenever you get paid. You are putting the same amount of money in the investment regardless of what's happening. You don't have to think about it. So those small investments over time, which is what discipline is, doing the right thing over and over and over and over and over again, those small investments are growing into a bigger pot of money. So let's just go ahead and automate this wealth building skill of discipline. And let me tell you, the system, the process of automating it will win out day after day, as opposed to leaving it to your emotions. So systems win over emotions in the long run. All right, so those are our three benefits of dollar cost averaging. Let's talk about two drawbacks or two obstacles. Might be a better way to contextualize it. So the first drawback or obstacle is dollar cost averaging does not eliminate investment risk. Risk still exists in the market. You can still lose money in the stock market. Now, we'll say this, the stock market has recovered 100% of the time if you stay in it long enough. But it's important to know that dollar cost averaging isn't a magic bullet. It's not a silver bullet. The markets can drop and your accounts can continue to fall. But if you're in it for the long term, you will more than likely win in that long term. So keep this in mind too, though. There is risk associated with staying in cash or going too safe. I'm doing air quotes here for those who are not watching on YouTube. Being too safe means you're going to miss out on the recovery. So if you had money, if you were invested and the market dropped and then you went into safety and the market recovers, you're not going to participate in that recovery. So all that to say, dollar cost averaging doesn't eliminate risk, but there's risk anywhere you go. You're invested for the long term, might as well hang around and take advantage of the recovery when it does happen. The second obstacle is that staying the course is mentally and emotionally difficult when you're watching your portfolio values drop. I get it. I feel it. We're all emotional being. I mean, we're all humans. So we have these big emotions, and I get it. Research time and time again shows that losses feel twice as painful as equivalent gains feel good. Let me say that one more time. Research has showed us that losses feel twice as painful as equivalent gains feel good. So I get it. Market dropping feels terrible, and investing in a dropping market sometimes can feel not like a wise decision, but I'm telling you that it is the best thing that you can do for your wealth building endeavor. So y'all, if you are contributing regularly to a 401k and haven't stopped, congratulations. Stay encouraged, continue doing it. If you're thinking about stopping your investments, don't. Keep doing it. Don't stop. If you've stopped investing in your 401k because of the market, keep investing. Keep investing. And this actually might not be a bad time to increase what you're putting into your 401k. Maybe it's an extra % or 2 of your income, but investing in a down market is actually a very good long-term investment strategy. So stay invested, keep investing, use your superpower, your dollar cost averaging superpower to build your wealth in your 401k. Thanks for listening, y'all. If you know someone who this would help, go ahead and share it with them. And don't forget, plan wisely, live confidently.